Apple's upcoming iPhone 18 Fold is creating massive buzz, but not everyone believes the hype. According to analysts at the brokerage firm Jefferies, expectations for Apple's first foldable iPhone are getting far too optimistic, and that might become a big problem for both the company and its investors. Jefferies recently downgraded Apple's stock rating from hold to underperform, signaling concern that the company may be overvalued because of unrealistic hopes for future iPhones, especially the iPhone 18 Fold. The firm also slightly lowered its price target for Apple shares from $205.82 to $205.16, even though that change seems small. The message behind it is significant. Jefferies believes Apple's upcoming products, including the foldable iPhone, might not live up to the sky-high expectations surrounding them. Following the downgrade, Apple stock opened lower and dropped by as much as $3.18 before recovering to close at $258.02, just shy of its all-time high of $260.10. Despite the rebound, analysts say that much of the current excitement in Apple's stock price is already driven by the strong sales of the iPhone 17 series, which might have inflated expectations. For what comes next, the iPhone 17 series introduced major upgrades such as promotion technology for smoother visuals and an always-on display, features that were previously exclusive to the Pro lineup. These improvements have helped boost demand, but Jefferies believes investors are reading too much into this momentum. They warn that Wall Street's rising expectations for the iPhone 18 lineup, and especially for the foldable version, could end up being too optimistic. Jefferies points out that Apple's current valuation already assumes an overly bullish iPhone outlook. The firm also argues that unless Apple introduces truly groundbreaking innovations, it may not be able to sustain strong replacement cycle demand. Lower prices alone won't be enough to keep profit margins healthy. Another concern raised by the analyst is related to the new iPhone Air, Apple's thinnest ever model. Despite its ultra-slim design, it hasn't managed to catch much attention from consumers yet. Jefferies sees this as a warning sign that the market might not immediately embrace the iPhone 18 Fold either. The report suggests that betting too confidently on the success of Apple's foldable phone could be risky for investors. Pricing could be the biggest hurdle for the iPhone 18 Fold. Jefferies predicts that Apple will likely set the starting price at around $2,000, roughly matching Samsung's Galaxy Z Fold 7. While that may seem fair for a premium foldable, analysts believe that $2,000 might be the upper limit of what consumers are willing to pay for such a device. Anything beyond that could significantly reduce demand. Apple has always positioned itself as a premium brand, and a $2,000 price tag aligns with that strategy. However, the challenge lies in convincing average buyers that a foldable iPhone offers enough value to justify that high price. If the iPhone 18 Fold ends up being viewed as more of a luxury gadget than a practical upgrade, sales could fall short of expectations, especially given the limited adoption of foldables in the market so far. Interestingly, not everyone shares Jefferies' cautious outlook. Earlier this week, Seaport Research Partners gave Apple a buy rating with a price target of $310, nearly 20% higher than the current stock price. Analyst Jay Goldberg praised Apple for becoming more efficient at monetizing its massive user base through services and ecosystem loyalty. According to data from FactSet, out of 50 major securities firms tracking Apple, 31 currently rated as a buy, 17 as a hold, and only 2, including Jefferies, have given it a sell rating. This shows how divided Wall Street is about Apple's short-term future. Some analysts are betting on continued growth, while others think the stock may have already reached its peak. Even with the mixed opinions, Apple stock is hovering near its highest point ever, which reflects strong confidence from investors overall. But Jefferies' warning offers a reminder that markets often move in cycles of excitement and correction. Their report ends with a classic Wall Street saying, "Buy the rumor, sell the news." In simple terms, this means that investors often rush to buy shares when exciting rumors, like the launch of a foldable iPhone, start spreading. But once the product is officially revealed and the excitement fades, many of those investors sell to take profits, causing the stock price to drop. So while the iPhone 18 Fold could mark a major step forward for Apple in terms of design and innovation, its real-world success will depend on how it's priced, how well it performs, and whether consumers are truly ready to embrace foldable technology. As things stand, Apple's future looks bright but uncertain, shining with promise, yet shadowed by the weight of huge expectations. Whether the iPhone 18 Fold turns out to be Apple's next revolution or just another expensive experiment will only be clear once it finally folds out into the hands of the public.